Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is the last day of the year, Friday, December 31st. It's 5:09 p.m. Eastern Time, coming to you from Mancho, New Jersey with the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. I want to thank everybody that's reached out with their condolences on the passing of my mom. Thank you very much. It means a lot to me. Let's get right into the video. State of the market, we continue to be in an uptrend since 1227. You can see over here on the trend gauge. Market leaders still acting okay. We're showing bullish there. Short-term moving averages, focusing on the 21-day, we're okay there, above all moving averages on the 5 major indexes that we cover in these videos. Medium-term bullish with the exception of small caps lagging, can't get back above the 50-day moving average. Long-term moving average, the 200-day, same situation. Small caps continue to lag. We'll look at the indexes here shortly. As far as what happened today, day 4 of a handle, we had a big strong move up on Monday, and basically we've gone in a tight range sideways over the last 4 days. Really completely normal action when you put it in context of the very strong 4-day move that came on the back of a sharp 4-day move down. But sideways action, putting in a handle. One negative note: tech has been lagging all week. Anything that went higher since Monday, for the most part, has been outside of tech, so that's something we're watching closely. As far as the action today, the G5 index down 0.6%, S&P 500 down 0.25%, Nasdaq 100 down 0.6, Dow down 0.2, mid caps slightly positive, Russell 2000 down 0.15. Let's go check the market facts, which I've rechristened tail of the tape. We'll take a look at that, but first let's take a look at the team here at Revere. Always striving to keep our finger on the pulse of the market, participate in market uptrends, get out of the way during market downtrends, stay even keel during consolidation periods. And if you are interested in an approach like this, give us a shout. You can reach out to any of us. It's just our first name and then at revereasset.com. So that's Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com, or you can call 855-REAL-WEALTH. That's 855-732-5932. Make it your New Year's resolution to not get hit hard during a market downtrend. The flattening of the yield curve signals recession. We've got tapering, Fed tapering as a headwind, and I'm going to review things, the headwinds and the tailwinds, when I go through the tail of the tape momentarily here. So let's get into that. Let's bring up where we stand right now. As I mentioned, uptrend, headwinds. We've got a strong U.S. dollar. We've got COVID Omicron. We've got inflation, and we've got Fed tapering. All as headwinds in the market. Taking a look at sentiment on the put-call ratio, we're elevated but not extended. The VIX at 18.53 is under the 50-day moving average, so that's a positive. Again, something we're tracking, and the metrics that we're really we're looking at different metrics with the VIX and tying it into our exposure. Fear and greed, neutral to slight greed at a 62. 62 yesterday, closed at a 61 today. So our bull case continues to be staying above the 21 and the 50-day moving average on the major indexes. Primarily, we focus on the S&P 500 and the Nasdaq 100. We did reclaim that on 12/21. So as long as we stay above there, we're in pretty good shape. Bear case would be a failed breakout. Break below the prior all-time high at 45.46, but that's even further down now. If we break below the 50 and the 21, we'll get bearish here pretty quickly. Some news that came out today: China, a rumor, but it's a rumor from somebody that's pretty reliable on what they report, that China sales were extremely strong, and Tesla China sales pretty strong. Tesla had an early strong move but faded. So what we're coming into today, We were looking at the 4th-day handle that didn't break down. We stayed inside of it, so everything was okay there. Looking for increased strength in the G5, which we really saw a good day in the G5 yesterday, but we did not see that today. So today's action, flat open, briefly broke the 3-day range that we were in, and we had a weak close. So let's take a look at a 30-minute chart here of the S&P 500. Let me increase the size of this a little bit. So here you can see the breakout, the strong day up on Monday as we broke above this prior range that we had been battling, the high of which was 47.32. Challenged that late last week. Look at this strong move up here that we had off of the low. 1, 2, 3, 4 strong days. Now we've gone sideways working that off over the last 4 days. Ugly closes the last 2 days is something we obviously don't like to see, but clearly some profit taking there, particularly in tech stocks. So let's get back to the daily chart. And again, let me blow this up here. So you can see the strong move up and then the 4-day sideways pattern. So really not a concern. We're above the 80 MA. That's the purple line. We're above the 21. We're above the 50. That's the red line, and well above the black line, 8.8% above the 200-day moving average. Reminder, the market doesn't ever get into real serious trouble unless we break below the 200-day moving average. So notes, as I mentioned, no progress in tech leaders the past 4 days. You're going to see that when we go through the 21 over 21 list. There was only one stock that fell off of the list. And as we go through them, you'll see really no progress over the last 4 days. Anything that went higher over the last 4 days is non-tech. G5, I mentioned, down 0.60. GROTECTION, our flagship portfolio, down 0.18% on the day, slightly worse than the S&P 500. So the portfolio, we came into the week at 1.6% adjusted beta. That means the market has a rating of 1. So more aggressive than the market, and that's what we want to be when we're above the moving averages and leaders are acting okay. Closed the day today down 1.42 as we sold AMD, and this is AMD's action over the last couple of days, while not really alarming, but when we're not making progress on it, we need to see progress on our leaders. Otherwise, we're going to start cutting our losses tight and wrapping up profits. In the case of AMD, we bought it several times. One was a small loss, the other 2 were small gains. So what was strong today? Gold and gold stocks. This is really a sector we're keeping our eye on. It's been showing relative strength over the last couple of weeks. Builders continue to be very strong. Staples were strong today. Base metals. Crypto started out very strong but faded badly. The SOX started out strong but faded, and the Qs were pretty much weak for the most of the day. So as far as key levels on the indexes, 47.66 is where we closed. We reclaimed the 21 and the 50 on 12/21, followed through with 3 days of strength after that, now flagging. This is a very bullish formation, this flag, but we want to stay above the 8 and the 21 if that's going to continue. And we really can go sideways for a little while because this really was a strong move up off the bottom following these 3 weak days in the market. So we did an about face going into the end of the year. Let's see what the new year brings. Current range over the past 4 days, 47.66 to 48.08. We've really closed right on the bottom part of that range. You can see the breakout area was the 47.32. So that's the next area down that we want to keep an eye on. And that was a breakout from this range of 46.50 to 47.20. You can see all this congestion over here that we couldn't get through for a while. Finally, we did on the downside. This 46.50-ish area absolutely has to hold. And where is that relative to the indexes? 46.50 now below the 50-day moving average. So should we reach the 50-day, that's an additional level of support for the market should they pull back there. But we want to see it as a controlled pullback, not as cutting through it like a knife. So far, all of these reclaiming of prior pivots and moving averages is holding up the market just fine. The weakness in tech over the last 4 days, not really something we want to see. There's certainly rotation going on, but that rotation has taken place within the S&P 500, and that's why we keep a core position in SSO. So when we go from value to growth and back again and between sectors, all that is handled by being invested in the S&P 500. And then when the winds are at our favor, which they are now, when we're above the key moving averages, that's when we look to the leading stocks to increase our gains. So there's the S&P 500. Let's go to the NASDAQ 100. Looks very similar. 4-day flag, did not make new highs, although the S&P did. So a little bit of lagging from that standpoint, and you can see relative strength is reflecting that weakness in the NASDAQ 100 over the last 4 days. Let's go to the Dow Jones Industrial Average. This did briefly touch new highs this week before fading back into the range, but some relative strength being showed by the Dow Jones Industrial Average this week after multiple weeks in October, November of weakness. Note still, it's got room to run on a relative basis if we want to get the relative strength line back to where it was near its highs. So you can see all the way back here. Now, this is one of the key concepts and why we watch relative strength. So look at this area here back in March was where the Dow Jones Industrial Average made a high on a relative strength. And although price has made a new high since then, this has just drifted slowly lower, which means it's losing ground versus the S&P 500. But on the other hand, that means that it's got more room to run to catch up as it does outperform the S&P occasionally. And as it is a more defensive index, if those types of stocks are going to lead in early 2022, we'll be looking at this relative strength line to tip us off to that. Let's look at mid caps here. Didn't make a new high either, but they are back above the moving averages. Not really a flag on these. Notice how they have moved slightly higher, both on a relative basis and on a price basis, over Monday's highs. Small caps now, IWM, can't get above the 200. That's the black line. Can't get above the 50. That's the red line. Holding above the 21, but the moving average is not configured the way we want to be. And again, look at the extreme weakness in small caps since this failed breakout back here at the end of October. That tells the tale of not only growth stocks and growth leaders, but also small caps in general. Let's go to IWO now, which is one of the major holdings in the G5 index, and you can see the extreme weakness on a relative basis there. However, did get back above the 21 and is holding the 21 over the last 4 days. So something we're watching extremely closely to see if these growth leading indexes that are a good reflection of the type of stocks that we want to see going higher. They break down next week. That's certainly not going to bode well for growth stocks and the market overall. Let's go through the other 4 components. FFTY, you can see it flagging inside Monday's action, holding above the 21. So key levels there that we're keeping an eye on is the 21. You can see we've got an alert set there. We've got QQQJ, which is a mid-cap NASDAQ 100, sitting right along the 21 and the 200-day moving average. Those levels need to hold also. You've got PDP. This is a momentum ETF, looking fine, flagging above the 21 after a nice move up off the bottom. And finally, ARKK, this has been the big problem child. You see the inability of it to get back above the downtrending green line. That's the 21-day moving average. This thing just looks absolutely terrible, and it's dragging down the G5. You can see we've got an alert set at 100 here, but 6 times now over the last week and a half, it tried to get above the 21 and failed. There are a couple more indexes that we keep an eye on and may incorporate into the G5. One of them is the mid-cap growth index, MDYG. And you can see this actually acting pretty well and trended higher over the last couple of weeks. We're keeping a close eye on the stocks that make up the growth portion of the S&P 400 mid cap, and then finally MTUM also. This one flagging just like the other ones. So the G5 may become the G6 if we add in MDYG, which I'm strongly considering. So so we went through the indexes. let's go through key levels for next week, the S&P 500, and that would be for the bulls very clearly to break above the highs of this past week, so around the 48.10 area. 48.09 is a high. A bust through there would be a great signal, meaning this flag worked off some excesses and we moved higher. On the other hand, breaking back into this level here, the breakout level, 47.20-ish, we go back into this long consolidation, and then that basically means, of course, we've had a failed breakout on the S&P 500, and we'll react accordingly because that will be reflected in what's going on with the stocks that we own. So let's get to the 21 over 21 list now. And one stock that came off of the 21 over 21 list was a tech stock that we owned that just acted great on Monday and just now today's a low vol. This is a low volume week across the board, but look at the volume on AMD. Nice breakout above this 150 level. 4 straight days of selling. Not quite average, but above the move, the volume of when we got higher. There are so many other semiconductors that are acting better than this, and it did close below the 21. So we sold it and took it off of the list. Keeping an eye on 10 or so semis that are acting just fine, and in fact acting better than this. I know it's a big leader. I think they have a conference next week that we'll keep an eye on, but for now the price action over the last 4 days is not what we wanted to look at. When our small gain petered to basically break even, we exited the position because the way the market's acting now, you want to protect your cost basis at all costs. So that's what dropped. What added? Devon Energy, we added this to the portfolio on Monday on this nice move up in energy stocks. It flagged over the last couple of days along with many other leaders. You can see it's right near all-time highs around this 45.50 level. A break above there is what we're looking for. So let's go through the other 20 that held over from last week. If it's flagged, it means we own it, and we do own Tesla. You can see the strong move up here, flagging back into the 50-day. Still not the configuration we want with the moving averages, but they're working to get above the 50-day, primarily the 21. And if we continue to head higher, Tesla's going to announce their sales either Sunday or Monday, and that will probably be a key catalyst for how the stock moves. LRCX, again, compare that NVIDIA or that AMD chart that I just showed to this LRCX chart, and really no selling at all, just going sideways over the last 4 days, looking great. LRCX. Berkshire Hathaway, again, this is an example of anything that we see that worked higher is going to be a non-tech stock for the most part over the last 4 days. Berkshire certainly fits that mold. Vulcan Materials, another one, working sideways above the 21. Palo Alto Networks, near all-time highs, made all-time high on Monday. It flagged just like we've seen in pretty much all tech stocks. Really low volume on this. This is the volume pattern that you want to see from anything that's flagging this week. FTNT could be in the list also. That looks pretty well. O'Reilly, another case of a non-tech stock working higher. ICE, flagging nicely at the top of this flat base. Cube, a REIT working higher over the last 4 days. Toll, we own this, and we also own DR Horton, DHI. You can see how it is also working its way higher. I'll show the DR Horton chart. Same situation, working higher. Those are the two building stocks that we own. NTR, Nutrien, looking good, pulling back right along the 8 EMA. Micron, so one of our larger positions. We also own this. This is the strength that you want to see, this with the big attempt at the breakout on Wednesday when very few tech stocks were doing well. And I got some negative news about some possible chip delays, but that volume was below average on that. The market, for the most part, shrugged it off, and then you had another low volume consolidation day today. So what we want to see, the strongest of the strong are trending not only above the 21, but also above this purple line. That's the 8 EMA. Costco continuing to act very well. Sienna, here's one of the, this hardly gave anything back over the last week, and that's a testament to the strength in it as it stays above the 80 MA. Amt Reits acted great the last 4 days of this week. You can see how this one broke above the pivot in this double bottom base. Marvell, typical reaction of tech, did close positive today, but gave back most of the gains from Monday's move up. ANET, this one continues to act well, flagging after the nice move up on Monday, sitting above the 80 MA. Apple also flagging on the 80 MA. Pure Storage failed breakout on Tuesday, gave back really not good action here on Pure Storage as it's sitting right above the 21. And Builder BLDR, again, non-tech stock, working higher over the last 4 days, and Nucor pretty much going sideways, sitting right on this flat 21-day moving average, broke below it, but reclaimed it by the end of the day, and that's the end of the 21 over 21 leaders list. So that's going to wrap it. We've got our levels for next week that I reviewed. We've got our leaders list. 20 out of the 21 stayed right where they needed to be. One fell off. Tech lagged the last 4 days, but what we're trying to determine is it just putting in a handle for higher prices, or was this the indication that tech is going to sell off in January? We're open to both outcomes. We've got a plan both way. Our downside, if all our stops are hit, is less than 3% right now, and that's going to wrap it. So, as always, like to hear from you. I'm on Twitter at dvandenbord. Email don@revereasset.com. The phone is 855-REAL-WELL. So wrapping up 2021, wrapping up the month of December, and wrapping up this week. This is Don Vandenbord telling it like it is. Thanks for listening. Have a great New Year's. Talk to you next week.